Hello, everybody. Welcome to Wednesday. The S&P 500 was up 0.25% again, just like yesterday, basically. Another new all-time high, which is, again, I think really important. Last time we hit an all-time high, and then we fell right back in, at the end of January. So staying up here for a couple of days at least and, have a nice run might get us going in the right direction. The Fed minutes came out today. And overall, if you looked at them, you'd say, oh, this is kind of negative from the standpoint of, they were talking about their concerns around tariffs and immigration. And so, will that cause inflation? They're going to wait and see type of thing, which kind of feeds into the overall thought process that they're not going to be lowering rates much this year, if at all. However, one of the pieces in there, they talked about discontinuing or lightening up on what's called quantitative tightening. So, for example, during the 2008 downturn, during the pandemic, the Federal Reserve went out and purchased bonds on the open market called quantitative easing, and that's just to try to stimulate money motion, get the economy going, and what have you. It's a little controversial whether it really works or not, but nonetheless, the Fed Reserve had accumulated a total of $9 billion worth of bonds on their balance sheet. And so quantitative tightening is where they start to sell those bonds in the open market and start to reduce their balance sheet. And they've been doing that now for quite a number of years, for at least since 2021. And so if they stop doing a little bit of that or all of that, that is a way of essentially stimulating the economy a little bit. And so I think the market responded to that today also. So, we'll see what happens there and how things play out. But again, I think, from a standpoint of where the market is, it's important that it stay above the all-time high, at least the 6,118 that we had trouble getting through for a while there. So anyway, we'll see how this goes. That's our third all-time high for the year. We're here kind of, into February. Last year, we were, well ahead of that, obviously. So this won't be as good as last year. That's not to be unexpected after two big years in a row, having one year that might be slower here. We'll see how this plays out. But anyway, that's what's happening today. Looking forward to being able to talk to you tomorrow. Thank you.